The time has come for those who are waiting for property prices to drop. Let's talk about this today. Now, many of you may have seen this article that says that private home prices dropped 0.7% in Q3 as buyers find cheaper option. And this will sound like a very obvious case whereby prices are going down. So today as a buyer, you'll be thinking like, should I be waiting first before I buy? And as a seller, you'll be thinking like, should I reduce my asking price since the resale prices, since private property prices has dropped? And some of you, if you're staying in HDB flats, you'll be thinking,
oh, maybe it's time that I can start planning my finances for the upgrade.
Because all these just points to one direction, which is prices are going down. In today's video, I'll be addressing the emotional aspects of buyers and sellers when you're looking at this and what you should be doing ahead. So how this video is going to be done is, number one, I'm going to go through the TLDR version of this article. Second, I'll be sharing with you what happened previously based on facts and figures in similar occurrences. Last but not least, what you should be doing as a buyer, seller, or even a HDB upgrader. Now, before we go into the point number one, if you enjoy content like this that breaks down information and makes it easy for you to digest, do me a favor by liking this video because it's going to help me a great deal. Thank you. Coming to the TLDR version of this article, first and foremost, we want to look at this table over here, which shows us clarity on the performance of different market segments. And if you look at the overall is minus 0.7%, which tells you that the price will be going down. However, if you look carefully at the next row, right, it says the landed property minus 3.4%. Non-landed property actually saw prices increase by 0.1%, which includes core central region minus 1.1%, rest of central region, which is your city fringe area, at a price growth of 0.8%, and the favorite OCR region, which is my favorite, at a stagnancy phase where the prices didn't really go up nor did it go down. So what does this table show you over here? It shows you that overall price index went down largely due to the landed properties and of course the CCR properties, which usually comes with a higher PSF. When these prices actually go down, it easily brings down the average PSF of all segments, while a slight drop in the CCR properties could result to a huge drop in terms of the average PSF of all regions in Singapore. All in all, this table is telling us that the landed property segment and also the CCR segment is the culprit for this time round's drop in pricing. The 0.7% decline in URA overall price index is the biggest quarterly decline since the first quarter of 2020, which prices have shed 1%, but an improvement from the flash estimates of 1.1% drop. Overall prices in the first 3 quarters of 2024 rose 1.6%, so it's very different from the headline, significantly slower than the 3.9% gain over the same period in 2023, according to URA data released on October 25th. It's worth noting this thing is that today when you're looking at the price index and whatnot, right, the interesting thing is that only in end October, which is 4 months from since the start of Q3, now we are talking about whatever happened 4 months ago. And today, if you tell me the landscape is pretty different, so make sure you stay until the end because I'm going to share with you like what I think you should be doing. Landed property prices fell 3.4% as mentioned earlier on in the third quarter after a 1.9% increase in the preceding quarter. So non-landed home prices growth 0.1% in the third quarter compared with 0.6% gain in the previous quarter. So all in all, it's just telling us that the price go up, go down, go up, go down. So what I can say over here is that when you're looking at this price index, it's always a lagging indicator. Why? Because now we are actually talking about transactions that happened since July, which was already 4 months ago. And back then, there wasn't any indication that Fed interest rates are dropping, but today the Fed interest rates are dropping. And if you did not catch earlier on what in the table that I showed, right, you have already seen the uptick in terms of pricing because October 2024 we saw a few launches which will likely be bringing up the average pricing, and my prediction is in the next quarter, right, it will say, oh, the price has increased once again. And if you do not believe in my prediction, right, this is one video which I predicted that the next preceding month it will say that the record number of transactions and prices in the next month, right, and it happened. So go and check it out if you wish to. And all in all, I'm trying to say is that, mark my word, next quarter report will say that the prices has gone up once again. And last but not least, for the first 9 months of 2024, private resale transaction jumped to 10,351, up from 8,498 units in the same period of 2023, which further reinforced the earlier fact that today, if you look at the overall transaction volume of the year, it speaks differently from what you see in the headlines that just talk about what happened in the last 3 quarters. Now, before I move on to what happened historically based on facts and figures, the data show us that only about 20% of of you are subscribed to the channel. And if you could do the channel a favor by subscribing to the channel, we promise you by creating better content and more in-depth content so that you can make better decisions in the property journey. Thank you so much in advance. Historically, what actually happens? So there's always a popular belief that property prices will drop, and for people that have bought their properties way earlier and enjoyed like low PSF, below 1000 PSF, they always think that the prices will drop. So let's take a look at the perspective whereby will the prices drop over here. So historically, ever since the caveats were being recorded, right, the transaction volumes were being recorded, you can see there are a few instances where the prices went down. Firstly is actually in year 1995 during the Asian financial crisis. The property prices went down by close to 2.5 years straight without looking back before it recovered, and you can see a price drop of 42%, which is a 20% drop per annum. The next, you can see that the prices went down since year 1999 quarter 4 to year 2001 quarter 4. Prices went down by a total of 23% over 2 years, which records about 12% drop per annum. Next, during the subprime crisis, you saw the prices went down 32% over just about 1.5 years, and in terms of the yearly drop was 23.2%. The last but the most latest one was ever since government actually came out with the cooling measures, you see prices went down by 20%, which is a 24.54% drop per annum over here. So do you think that the market will drop like the previous time this time round? If you look at the latest ever since 2023 to 2024 quarter 2, prices actually tapered by 7.7% already. And before the trollers come in to type all the hate messages, right, the data that I'm using combines live data as well as the URA transaction data. Live data means that the transactions that were submitted to Propnex, right? Because you must understand one thing today, when you look at the URA caveats, certain properties that were bought without a loan need not be caveated, right? So you may not be able to see the transactions. Just for example, today when you see some of the landed homes, you see them rebuilding the house, you see people moving into the new house, but you don't see it on the URA transaction. And the reason why is because they pay full cash and they have a choice whether or not to actually lodge a caveat. As we move along, we want to understand one thing, as I always explain to my clients, if you look at the different era in terms of the price drop, sure, waiting for prices to drop has got nothing wrong. However, we need to also understand the relevancy of the data, whether is it relevant to today's buyers and sellers. So first, we want to look at the year 1995 when you see a prolonged correction in terms of the pricing. However, if you look at year 1995, the people that were buying properties will likely be born in year 1945 to year 1965, right? Which at that point in time of purchase, they were about 30 to 50 years old, which are the buyers in the market back then. So this was a more misinformed / emotional / using experience to buy property era. And next, if you look at year 2005 onwards until year 2013, I would think that this will be a speculative era, because 2005 was the year that 3G services was being introduced to Singapore telco, and you see a lot more people using iPhones, using 3G, and that was when we started using Facebook and whatnot. So people were a little bit more educated. However, back then policies were not in place to curb speculation. There wasn't SSD, there wasn't TDSR, there wasn't ABSD. That was the era of land banking, where your rich parents are actually buying properties to flip and to trade, to sell overnight, and the landed property owners could just pledge 300k and qualify for the loan, the 80% loan to buy the properties. That was also a period of time whereby people can buy properties with just a 10% down payment. Most importantly, these people were the Gen Y people, which I think today many of them are also not really buying into new launch or buying the properties these days, because many of them enjoyed PSF of below $1,000 per square foot back then, and today they cannot accept the new pricing of $2,000 per square foot. All in all, what I'm trying to say is that the buyers that are buying properties, the demographics, and in fact the intention were all very different from today. So having said that, there's nothing wrong with the older generations not willing to accept the current prices. However, it shouldn't be stopping buyers who are new to the market and still have confidence that the property prices will still go up over time. And to reinforce this, right, you can see that the seasons of drop is always very brief, like 1 to 4 quarters. But on a positive note, the seasons of correction are usually much shorter than seasons of growth, and the growth over time is more substantial as compared to the brief correction over here. And it's largely due to the rise in income. If you're born in the 70s, in late 1990s, if you're a fresh grad coming out from the army and then finish uni, your starting pay for a degree holder would likely be slightly above $2,000 or $2,500. However, in today's context, fast forward 20 over years later, today a fresh grad will be expecting a pay of $4,000 to $4,500, even up to $5,000 depending on which industry that you are in. So you really see a huge jump in terms of the affordability when it comes to buying properties. And that further reinforces why property prices are constantly going up and the buyers are getting younger and younger. That is in a nutshell why. So all in all, historically, what proven is that the new highs are always higher than the last high and the new lows are still always higher than the last low. Meaning to say that buying a property is never speculation, not gambling, and you cannot flip within 3 years without paying additional seller stamp duties. So if you have a clear game plan of what you want to do and you have sufficient reserve, you just need to know that the drop is always a very short period of time and the growth is over a sustained period of time. So give me a call if you wish to understand what game plan you should be considering for your current situation, because everyone's situation is different. Now, what should you be doing as a seller today? I would think that if you are a seller of a landed property, you may have to consider reducing your price a little bit because the prices are not really going down. However, it's not really chasing the new high once again. But do remember to refinance your loan because the interest rates are really low right now. If you are considering a loan and you need help, this is my number. Do take note to make sure that your loan comes with waiver of penalty due to sale, because you just want to make sure that you pay lower interest rate as of now. However, you don't need to be a stumbling block and risk paying 1.5% penalty for selling before the lock-in period. Extra note, just take a 1-year lock-in will be sweet. But getting the loan is just to make sure that you take advantage of the low interest rate. However, if you're a seller, do not sell unless you have a plan, because cash is trash. If you're thinking of cashing out and keep the cash, I would not think so, because over a sustained period of time, data has shown that the prices will still continue to go up. All in all, no need to panic, because I don't think prices will crash, because this is just a short period of time where you see a drop in pricing. And why? Because if you look at the number of transactions, right, look at this chart over here, it shows that each time the transaction volume surge, it's proven that prices will continue to go up. So ignore this emotion, this fear or drop in how many percent. Look at the volume. When the volume of transaction constantly goes up, you know that there's certainty that price will hold, at least hold, or in fact go up. Because when the prices are down and the market is not that good, you see that the volumes will go down. Why? Because if you have bought your properties, let's say 10 years ago, a landed property, you maybe bought it at $1.5 million, today it's worth 3 mil. You only have a loan of $1 million, and with the interest rate constantly going down, you may be only paying about $2,000 installment for the landed. Why do you need to sell? In the worst case scenario, you just rent it out and you still get positive cash flow. So as a seller, no panic to sell. If you need someone to help you to sell at a price that you want, you can consider calling me as well. And for buyers, I always fall back to my 3 golden principles, which is number 1, start saving and start investing in properties as early as possible, constantly increasing your asset net worth by upgrading as soon as you can. Last but not least, always try your best to have 18 months or 20% buffer to tide through difficult times. Now, for buyers of the CCR and landed properties, I would think that this is quite a good period for you to upgrade from existing property, for example, an OCR or RCR private property, and then consider consolidating your funds to upgrade to a CCR or a landed property. Why? Because since the market is suggesting that there's a slight drop, it forms an opportunity for you to negotiate for a slightly better price, because today if you're going to the OCR and RCR, most of them will still be asking for record prices. So if you're on the OCR and RCR, it's quite a good time to go and find value deals in the CCR and the landed properties as well. However, do take note, whenever there's an opportunity, you must make sure that your property is already sold, because recently I've been getting a lot of calls from upgraders, from condos, looking to buy a CCR or even the landed properties. They always want to wait until they find something they buy. However, it can form a stumbling block, because the seller who is willing to sell at a lower price most likely wouldn't want to wait for you for months before you can sell this property. So my advice is to get your property sold first, so that you prepare yourself to find the good properties in the market. And you'll be telling me,
Hey Marcus, if I sell already no place to stay, how?
actually you can always rent interim, because good deals are hard to come by and good deals don't wait for so long. So get your unit sold first and wait for the good opportunity if you are serious about upgrading. So if you are purely buying on top of the 3 golden principles, what I would recommend is that buy what you can afford now instead of waiting to save up more, because the speed of saving up more will most likely not be able to catch up with the growth of property prices. Next, avoid getting emotional by spending too much on renovation, because in future when you sell, the buyer will not value the renovation the same way you do, because it's of your own taste and preferences. All in all, the above is largely due to the fact that this will likely not be your last home unless you are very old already. If you are someone of age 30 plus to 40 plus, most likely in the next few years when the property prices go up, you will start to think of selling again. And whatever decisions you make today will impact the time when you try to exit, because all these additional sunken costs that you are spending may eat into the profit, and eventually you may not have enough to upgrade to the next property. So that's all. Like, comment, subscribe, turn on notification bell, because we post weekly real estate videos like this. Any other queries, do give me a call, and I'll see you at the next week's video. Bye.